Uh, what's up, Esteban? Yeah, we're just going through price, bro. Today we're gonna talk about the third episode of the 2022 mentorship and opportunities from the market today. So
Okay, cool.
getting straight into so this is a screenshot straight from the video. Obviously there is no buy side, sell side mark, but this is buy side right here, and sell side is right in this area. Y'all got that?
Mm.
So
Yeah.
the first thing we would be looking for would be for us to violate sell side. So I'm just gonna leave it not marked up. So imagine that this right here, like buy side, sell side is right here, okay?
Yep.
So we trade through sell side with displacement on both ends. We got bearish gap and we got a bullish gap.
Yep.
Entry here, entry there. So if we're looking to go long, we're looking for a swing high to be broken to signify the market structure shift. And that's the three candles with the middle candle being the highest and the two lower lows to the right and left. So where do you see a market structure shift? Right, where do you see a swing high right before we take out the sell side?
Black. Order looking like a, or not. Yeah, that one right there. Yeah.
Yep. So for the long example, so okay, we trade through sell side. That's our first criteria.
Boom.
Second criteria, we're looking for a market structure shift. We trade through and then we trade back up. Market structure shift.
I got a question real quick. Sorry.
Yeah, well, yeah, go ahead, bro.
So for me, on the market structure shift, for some reason my eye always goes to the higher. So like the two
Here.
kind of like right there. Yeah, that's where my eye goes to. So
Yeah.
I feel like that's why I'm always kind of like late into these entries, kind of a little bit.
Yeah.
Not really seeing kind of like, but now that makes sense right there. That kind of makes sense.
Right. So there, and like I said, it can even happen. Kyrick had an example today where the market structure shift is after the liquidity sweep. That can happen also. So like I said, market structure shift and ICT says so as soon as price trades above here, the candle doesn't have to close above it or anything. If there's a fair value gap after the market structure shift, you're looking to enter immediately. And you can enter one of two ways. With a market order, you could just watch price to wait for price to trade in and then market order when it trades, or you could just put a limit order, which you just put it, and then as soon as it trades to the bottom of the gap, really however you're comfortable, depending on how you do your risk to reward, you could put your limit there. You could put your limit in the 0.5 level of the gap. You could even put your limit, but down here. But obviously, if you had your limit down here, you would have missed the move. And for placing your stop loss, you could put it here, or you could put it all the way down here. But ICT was just talking about it in this episode. He actually has a trade where he pretty much has an identical trade to this setup, but it trades down here. So whenever you are trading, if you're trading micros, you'll 100% have enough cushion to weather this retracement all the way into this gap. But if you're in minis, I want to say this is 40. That's a big candle. That's a wide stop to be in minis right there. So like I said, whatever you do enter, you just need to be able to have your stop. Whatever you're risking, you have to be able to allow price to trade back into here, because price can trade back here and it would still be a valid trade. So going, and then for setting partials, okay, any of y'all, where would you guys look to take profits for going long?
This going long. Yeah, this first whatchamacallit, swing low at 10:46 probably. I mean, that's small, that's not much.
I don't know how many ticks that actually is. It's
Yeah.
easy to see in hindsight.
So if you would have entered at 20, and so I mean, this is kind of well, I can't do the fib because I'm on the, but like I said, we would just look to fib. 0.5, I'm guessing is probably right around here.
Yeah, because
Yeah.
some
Fib
almost equal.
equilibrium is probably right here. So you would take your first and what is that? Untapped fair value gap right here. We got these equal highs right here. Also another opportunity, fair value gap, swing high. And then obviously you could take the last part of your position off right here. And
Oh shit, my fault. I'm looking. Okay. So it's all right. So I just looked to the right, but nigga, in real time, I'm not gonna be able to look to the right, nigga. I'm gonna be looking to the left. All right,
yeah.
so
This ain't what I'm saying. This ain't even the right side ain't even happened yet. When you're setting your
oh
Wait,
shit.
Drake,
yeah.
for when you're speaking on like taking partials, I understand like obviously at 0.5 and then looking back left whenever we leave some on, but I think it's later on, or maybe this is just like a little too far down the road, but as in terms of trailing, like the partials with the stop loss, how do you usually, what is your mindset usually with that?
So I would say like when you're first trading, because everybody's psychology is different, but because like there'll be times where like at least when I was starting where I'll trail my stop loss, I'll take my partial and then I'll stop out at break even. And like I'll be ready to crash out type shit. So like and ICT talks about it.
Mm.
Basically, when you take that partial, because he says like it takes a long time to really learn. And if you know how the market moves, bro, it's chasing your stop, bro. Like at every chance it gets, if you're getting too aggressive, it wants your stop. So um that's basically what your partial is doing is allowing you to keep your stop loss where you put it initially. I know like ICT has said that. I remember him saying that exactly. So when you're first, just don't even worry about trailing it for real.
Okay.
Unless it really ran far. Cause like prices, yeah, bro. It's literally a magnet for stops.
Right.
Mm-hmm. So that was the long example. So here we have buy side. Does somebody want to break down the whole? Does somebody want to break down the trade for me? It's the same thing but flip.
Mm-hmm.
Anybody could go, or somebody could go. Like somebody can give me the market structure.
Got displacement, big green tick.
Yeah.
Run buy
Somebody
side.
give me each one.
What'd you say?
So starting off, somebody give me where is the market structure shift at? We're looking for a swing low.
At 11:16, I'm guessing.
Right there at that black.
The black.
Right.
11.
So that it. This,
That
yeah. So this is our market structure shift. This is the
Okay.
one that ICT highlights this, but I understand your logic. Like I think this is totally valid, but you wouldn't have got an entry.
Mhm.
You see, yeah, you wouldn't. Like the market structure shift, we break down. Possibly, I don't even know what happens with price after this leg because it's cut off. But I want to say, if it was a bearish day and there was a reason for price to continue going down, this is a fair value gap right here, but we are damn near at equilibrium already. So
Yeah.
it would almost be chasing. So yeah, this is the market structure shift that he had pointed out for this example. So okay, we trade through the market structure shift. Now what?
Waiting for a fair value gap
Yep.
on the backside going back up.
And as soon as we trade through, we trade right back to it. Like I said, market or limit order, and you could place your stop here or here. And then for partials, I know ICT was saying he took his first partial here. And then this is the equilibrium in this area.
would be the low hanging fruit too.
Yeah. This would be the low hanger. That would be it. This is extra low, but this is equilibrium right here. Equal lows, equilibrium. That's like I like to call that a double confluence.
Gotcha.
So, 1 second.
So I know ICT has told us this because I mean I'm already on episode like 30 something, and I'm still kind of not real. I'm getting it like really good, but it's just a little miscellaneous things like the market
Right.
structure shit.
So you
You know what I
guys
mean, just little
see,
stuff like that.
yeah. So this is his, like, this is literally the screenshot from the video. This is everything that you guys pointed out to me, just with his, he calls it with his makeup on it. And we could do a quick talk about order blocks. Like I said, it's not, I don't have the best understanding, but he was talking about them today. So this whole, these 3 candles, this is a bullish order block. And let me tell you, I'm gonna read to you guys exactly what he said. How is your understanding on order blocks, Kyric?
It was just like the
Just
run,
watched it today. Yeah, what do you,
yeah,
what
the small run right before a imbalance, obviously going the other way.
So
Kind of how I
what's
see.
an order block? It's a change in the state of delivery. That's exactly the word that he used. And I think this is such a good example because so the start of the order block is where the candle opens up. And so this is where the candle opens originally, right?
Yeah.
And so when it's when price comes and trades back above this order block, it's a change in the state of delivery. So instead of going to sell side, now it's in the buy program. Now we're attacking buy side liquidity. We're attacking all the we're attacking buy stops. Make sense?
Yep.
This was another ICT pointed it out. This was another order block right here. And he was saying that where you could, when price retraced, you could buy that, buy the gap. And mm, 1 second. So yeah, here's that same order block. And then if you would go on the 2-minute, the order block was a little bit cleaner here. But yeah, he was pointing out that this was an order block. And I want to say, I'm not positive, but that's the 2-minute. I want to say this is an order block. No, that's the 2-minute. I don't think I had a 1-minute screenshot, but there was I want to say that this on the 1-minute was an order block. It was like 2 candles up instead of just a single. Wait, actually, hold on.
Hey Drake, so you said you want to get back. You said you want to get in the trade when it goes back into the order block.
So the order block is, think of the order block like a market structure shift. It's the change. It's pretty almost interchangeable the way that I'm grasping it. So like I said, this is the order block and this is the market structure shift. You see how like it's damn near at the same level.
Yeah.
And also, I'm gonna go into so do you guys have any questions on market structure shift and just buy side, sell side liquidity?
I'm still having trouble recognizing, like, I see it now, you feel me, like a market structure shift. But like you looking at the chart, like what's the defining, you know what I'm saying? Like how can you tell? Like,
Yeah.
yeah.
I'm gonna come back to this actually. So these are those 15-minute gaps that I was telling you about earlier, but we're gonna let me get a clean chart. So we're just gonna look at price from like the beginning of the day. What happened? So he talks about it in this episode actually. So the Asia session is 7 to 9 p.m. 7 to 9. And like I was telling y'all, the Asian range is pretty insignificant. Just because the volume, it's not really worth your time to trade it. So yeah, you're better off just waiting for New York or even London. So 2 o'clock. This is right when the market opens for London. It opens at 2 o'clock. So as you could see, we had a pretty big move down. We look at the higher time frame. 30. There we go. Okay, so just looking at the range, it's Tuesday. All right. So we have our low from 2 a.m. You see how, do you understand how I picked that? So like, let's say it is, let me put a horizontal line. So like you got a vertical line. So you guys aren't looking past. So like, say I'm waking up and I'm doing my pre-market analysis. It's like 8:30. So this is all that I'm like, this part of the chart, everything else doesn't even exist. Like, so we're on the 15-minute. You guys see these relative equal highs right here? Yep. Okay, so let's drop down to the lower time frame. So that's our sell side. What time is that? It's at 9:20. Bam. All right. So we have our Asian high. This is the Asian high from 7 to 9. Now we have 6.5. All right. So do you guys understand how I made this range? You could really even honestly put the liquidity right there. Kind of interchangeable, but does that make sense to y'all?
Yeah.
All right, so that's our range. And also, if you look back, we're still on the 5-minute. You see
Well, my fault. Why isn't the range, the buy side liquidity range, around like that 6:15 high or whatever? 6:15 a.m. But today though, today. This morning.
Say that one more time.
So why isn't
Where at?
At 6:15-ish a.m. today? Yeah, right there. Like, why isn't that done? Or 6:40? Yeah, that.
Like I would just keep the level here just because we didn't even have any displacement. So like the range is pretty much, I wouldn't have moved it because that's not a liquidity sweep.
Like it's
It wasn't like you see this
Yeah.
displacement for that wasn't, yeah, like that was just a
there's no like significant run through.
yeah, it was just, and like you could, it wasn't I'll put it there. That works too. But that's how I was looking at it earlier. But so on top of the fact that,
so could you consider those like equal highs now?
yeah, that's exactly why that's why I marked it back there. Cause like I said, it still
That's
has
what I was asking. That's
my
fault. That's what I was asking.
Yeah, that's what I'm saying. No, I like that you're thinking like that, asking, but that is you have the right idea for sure. So these highs, that's what, like I said, it's generating these for some reason. We know that it's gonna come. Literally, the video that I sent, it's trading right below. It's coming back. Like it's gonna come back, but it's just how much liquidity can the market get out of it before type.
Mhm.
So on top of the fact that we have these equal highs, we left this fair value gap here, 5 minute. So we know that like we got equal highs, fair value gap. Like I'm saying, this is some shit that's jumping off the charts. Like we got to come back here for some reason. And so right at open, we trade above. Do we trade above this high? Yeah, we trade above this high. Let me drop down 3 minutes. Because there was a nice fair value gap. I think I was on the 3 minute. Yeah. This gap right here. But let's see if there was. Strap. So we're on the 3 minute now. Let me see.
What time you looking for? Ish.
I'm just trying to look for the just the trade setup in here. If I'm looking for a swing low, and then
I think I have
yeah,
had
I
one.
see it. So where's the
really
swing
good.
low? It's after this line.
When I had sent you that power of three structure from this morning, Dre is right there.
Here?
Remember the accumulation manipulation shit?
Yeah, but here.
Oh, I think I took that one up top.
Yeah, I'm about to say, could it be the next one?
Took that blue one up top.
This one.
Yeah.
Yeah, I guess you could. Like I said, you could really use both. They both would have given you the same entry.
Yeah.
You would have bam, market structure shift, wick, entry,
Mm-hmm.
stop loss. Let me hit the fib real quick.
And the fib's gonna tell you like where to target.
It's just gonna tell you where the equilibrium is at. And
Mhm.
so let's look at the equilibrium.
Where you should target.
So, equilibrium right below the fair value gap, right below the equilibrium, we got an untapped bullish gap. That would be your first partial, no brainer. Another gap here. Like I said, I like to use these levels. I'll take a partial here, I'll take a partial here, and I'll take a partial. This is where I close the whole trade. Obviously, there was a nice continuation to the downside, to and through, but you don't want to get greedy. You're just trying to learn. And let's see what this would have. Let's see the risk to reward. Okay, yeah. See, this was crazy trade. This was what 8.75 risk to reward. You had a 20-point stop loss for 170 points. And I mean, shit, this our third day on here. Y'all seeing this shit is repeating every day.
Mhm.
This is, yeah, there's opportunity to do this shit every day. 8.75, that's like a pretty crazy risk to reward. But if you on the charts every day, you journaling, back testing, market it up by yourself, you gonna find these bitches. And let's see what it really ran. If you would have hold, obviously ICT talks about it. You're never gonna be perfect, but say you did what did it offer today?
Some just like bearish the whole day shit, or
Damn near. There was a little bit of what time was this? Yeah, no, there was a little PM push, but it sold off. That's crazy, but it's 330 points,
that's OD.
17R. What is that? So if you're in one mini contract, that's $6,600 you made, risking 400. That's what. And I'm gonna go into the higher time frame just so we could. Oh no, I want to talk about that one trade earlier. I sent y'all this in the group chat. Estevan, you weren't in it yet. I just added you. But so like I said, we're already bearish on the weekly chart. We're expecting lower prices. So I saw this on the 15-minute chart. Was it that good? Let me look at it because it wasn't why does that look so different? I'm so confused. 230. No, I'm busted right now. Oh yeah, I'm tripping. It's this gap. So this gap up here. So just using the Fibonacci on the higher time frame and just keeping the bias that we are bearish. When price trades into this gap, as you can see on the 15-minute, the bodies are perfectly respecting. Like a good conservative trade here would have just been short when we see the price breaking like it tried to or actually let me just go onto a smaller. Actually, no, I was saying I already talked through it a little bit on the text, but as you could see here, say you're on just on the 1 minute watching how price reacts. The bodies just barely stick out, but you see we have a swing high. Like price is respecting this gap. Like that's pretty obvious. So what I would have did in this situation was just you don't have the like I said, that it happened so fast that you didn't get a market structure shift. But with us being deep in a premium and having and it being in a bearish fair value gap, that's that sort of double confluence that I talk about. So you would just short, either you could short a close below the gap, could wait for the close below. What would that stop be? You would have about 72 to about a 20-point stop loss here. Or you could just wait. You could either have a hard stop loss at this high or just close on the stop above the fair value gap. Does that make sense?
Yeah.
And then going back to the 15-minute, you would have just took your full position in this gap right here. You guys see that?
Mm-hmm.
So will we see? You see the blocks candles going down. Will we see that as a what we call a order?
Which one?
Just all like you see they're all grouped up and they're leading down. So is it like we call it? What did we say it was? A order block?
Block. So I'm on such a high time frame right now. I really don't be looking for on the 15-minute, but I would say like potentially because it's like when it's going to the liquidity. Let me look. So if we look on the higher time frame, you see what we traded to it, this 4-hour gap.
Mm-hmm.
That's the reason why prices looks like it might be reversing. But like I said, we're ultimately still bearish and this gap is inefficient. So we need to, like I was talking about yesterday, we need to close a bearish candle through. And as you could see, it's literally been doing that to the whole.
Right.
So yeah, I think we're going to continue to go through that gap. But yeah, as you could see, kind of equal lows here. The market is attacking that shit, bro. And let's look on like the if you look on the daily, let's just say from where we're at. So yeah, we're not even in this daily range from this run, from this uptrend that we've been in, from taking out all-time highs, we're not even back to equilibrium yet. So I think well, shit, this gap is, yeah, we got so much gaps to fill to the downside. So I would expect us to at least trade down to the equilibrium before seeing. I think it would be normal. I wouldn't be surprised if we saw this. So like if we're looking at this, like I said, this is you can apply the concepts to every time frame. Market structure shift, fair value gap entry, short to the 0.5. Obviously, with the futures and the prop firms, most of y'all won't be able to like swing, but do you see how that's basically the same shit, but we're just on the daily chart.
Yep.
I said we got swing low, or you could, yeah. This would be the swing low. Swing low before we take out all-time highs. Break down. Market structure shift. Fair value gap. Wait for price to trade back up to that gap. Short.
So that would be like as in terms of right now, wait for price to trade back up.
Yeah, just like that would be what you would be looking for price to do.
Right.
And let me see. So remember, like I said, Kyric, we were talking about that. Remember, I was saying this is my point of interest.
Mm-hmm.
We delivered that motherfucker.
Yeah, right through it.
Yeah, we delivered that shit. So that's no longer really it's no longer our point of interest because like I see he was talking about it today. So it's called a bullish fair value gap is a buy side imbalance. So it's already been delivered like the buyers delivered it. Like they literally whenever you see a fair value gap, literally it was like it's like all buyers, no sellers. And now all the sellers came through. They got their lick back type shit. So where does price want to go now? Like I said, I think that we will come back here and then continue lower. But it can go lower without trading to the gap. I mean, I'm sure you guys have seen the setups where market structure shift and that bitch just run and it don't even give you the chance to. But that is the idea. All right, what do you want to do you have that the what's his name, the trade that you took? Do you want to screen share and we could talk through that trade?
Who, me?
Yeah, the one that
Yeah.
you gave me. Oh,
We're running out of time. We might have to go ahead and
yeah.
just.
I'm finna actually no. I'm going to. I'll just pull up your picture for real.
All right.
Yeah. We could talk through it. Okay, can you guys see my screen?
Yeah.
Okay, so if you just want to, if you could talk through this one, Kyric, if you want to.
Yeah. So, the way I have it drawn out is basically step one, or the first thing I saw was a run through the sell side liquidity, with an inbound or with displacement, pretty much. And then, once that happened, it's kind of like what Drake said earlier. My swing high kind of formed on the opposite side of the of that like swing low that was set right there. But I guess it's like fine. I really don't care if it's on the other or if it's on like that bearish side or if it's on the bullish side. I just try to find one right there. And then the next thing I look for is kind of like that next candle. I think it's in episode 3, it's the candle where like ICT puts the light bulb above it.
Mm-hmm.
Pretty much saying that like this candle trades past the swing high, and I think that's where our confusion was coming from, Drake, where I was kind of like, I was labeling that as a market structure shift. And you always labeled the swing high as a market structure shift.
Yeah.
That was what was throwing us off. But I
Mhm.
kind of look at that candle where number 3 is as my market structure shift. I guess you can kind of look at it either way,
Right.
but it's kind of like a confirmation to me that like one, we have a swing high, and two, it got traded past. And
Mhm.
um, after that happened, obviously a fair value gap was formed, a bullish one was formed, and then there was an entry right into it pretty quick on that first tick right there. And
Mhm.
then I entered right there, and then I did have my fib set up, but with like the bias being bearish and like looking back left after like before that huge run, you can kind of see those highs right there, like just hovering around the
Mhm.
side liquidity line. So I wasn't too confident that it was gonna like, go up past those. If it did and I didn't, and I had like already got out, then it's whatever, I already got my profit. But with me being bearish, just on the day, I had a feeling that like it would probably get up to that line and then treat that line as resistance and then keep heading back down. That
Mhm.
way it would finish bearish. So that's why I set my target at that sell side liquidity line, and
Mhm.
I set my stop loss. I on this one I had it set, I want to say at the low of candle number 1 of that bullish fair value gap.
Yeah.
So the candle to the right of the swing high, it's low.
Smooth. Yeah, that's literally textbook. And then I'm probably gonna get cut off, but do you guys see how like this could have been a market structure shift, fair value gap short on this other end? Like I said, I'm